1, live.
Hello, everyone. Thank you for joining us from wherever you are right now for the Singapore Trading Festival, brought to you by Singapore Exchange and Investing Notes. We've lined up some of the very best financial minds across the world to bring you insights and ideas over the next few hours. And I think you're going to get a great return on investment on the time you spend with us today. To kick things off, we have the man whose team made today's event possible, the head of equities at the Singapore Exchange, Mr. Michael Sin.
Good morning, friends. Thank you so much for joining us today at the first ever Singapore Trading Festival. I really appreciate you making the time for us on a Saturday morning or Friday night for some of you. By way of introduction, as Edward said, I'm Michael Sin. I'm the head of equities at SGX, Singapore Exchange. It's super exciting to have so many distinguished speakers from across Asia and the United States. There's a comprehensive lineup of topics that I hope you'll find useful, particularly those who are taking part in the simulated trading challenge come Monday. Whether you're a professional trader, an individual investor, or markets reporter, there really is something for everyone. As the global economy continues to rebalance itself into a COVID exit, investors and traders continue to face market uncertainty, not just market risk, but also continually uncovering new and emerging market opportunities. In the past year, work from home has led to trade from home. We've all seen sustained interest in trading and investing. And while we're still traveling through this COVID corridor, this interest, this trading and investing interest, it represents a sort of new normal in market participation. This is a great time to be bringing our thought leaders and trading community together. And with this in mind, the Singapore Trading Festival will have industry experts, traders and investors exchanging ideas and insights, because we should all do this together, to learn, to adapt, to navigate, to figure out new opportunities in the stock market. Now, 2020's market range was huge. It seems recent, but it's also now distant history in terms of price performance. There are fundamentally only really three categories of investing strategy, of making money strategy. There's a thing called carry, there's a thing called mean reversion, and there's a thing called momentum. And so the flood of liquidity from governments and central banks around the world meant that momentum dominated everything else. Many of you saw this unfold in real time in the second half of 2020. And I'm sure you all took the opportunity to sharpen your skills on stock trading and portfolio management. Stock markets across the board have seen increased turnover velocity and trading volume, particularly from the segment of individual traders, both new and existing ones. For instance, at Singapore Exchange, the number of new depository account openings more than doubled last year compared to previous years. In fact, in March last year, the pace was tripled. And in January this year, as investors were weighing up how to price in the opening of various economic sectors in Asia, the daily trading volume on SGX was again higher versus the previous year for the 12th straight month. So clearly the shelter-at-home dynamic of COVID poured fuel on the embers of easy digital access to market data, news information, trade execution. This is a significant step up in intensity for market participants interacting with each other. Digitalization and democratization of access means more data is shared and exchanged via the internet. Traders and investors are gaining access to timely and high-quality market intelligence to support the research and investment decision-making. The flattening and widening of the retail information network means individual traders have become more confident and technically savvier. Not just that, they're getting younger and more influential. With more choice in trading software, particularly mobile apps from online brokerages, barriers to entry are also being reduced, in the form of lower brokerage fees. So, easier to trade and easier to trade frequently. There's every reason to expect that retail participation will continue to be intense. But, and there's always a but, this surge in activity, which has had many benefits, can also have drawbacks. Retail participation contributes tremendously to liquidity and market quality. With increased liquidity and a more diverse investor base, we see more companies wanting to go public and list to raise capital. This is a virtuous cycle, which offers investors new opportunities to invest for growth and wealth. But I also know you're all familiar with the GameStop story in the US. Shares of a video game retailer became a very expensive game in their own right. In a short period of time, and divorced from whatever the underlying physical reality of the business might be, there was very simply a zero-sum transfer of wealth between players. This happens all the time. That's the nature of speculation. But when you ground yourself back into the basic principles and objectives of wealth management, of how to get rich slowly and surely, this sort of ultra gamified trading situation underscores that with so many new participants drawn into the market, there is a need for education about managing money, managing your wealth, and your trading capital. Some of these animal spirits have spilled over into Asia, where highly leveraged retail investors are similarly taking on short sellers or piling into stocks on the back of social media hype. The regional newspapers have been reporting this phenomenon as ants in South Korea or moths in Thailand. But what is common is a liquidity-induced spike in some share prices. So the thing about education and financial history is that experienced investors remember that gravity often does what gravity does when valuations skyrocket too far away from business fundamentals. The GameStop story is actually ongoing, but anyone who bought in too near the top got quite significantly hurt just hours and days after that. In every sense of sound wealth management and accumulation, of trading and investing, this sort of exposure is going to damage you. And in some cases, it could even be illegal. Take, for example, the pump and dump activities on social media. Social media platforms may be useful for investors to share knowledge and information, but information needs to be critically analyzed and used wisely. It could just as easily be misinformation. As investors look out for wealth growth in a post-COVID world, it's going to be imperative to balance out market risks through well-diversified investment strategies and balance out the search for yield over time versus short-term returns. Over time, business fundamentals of companies matter, and investment decision-making is all about risk as well as return. While trading is now easy and accessible, investors will find that sometimes the best returns come from sitting on the long side of the book. This is why our Singapore market continues to attract investors looking for quality, value, and yield instruments in a well-regulated environment that can help them grow and protect their wealth. By now, we would already know that the pandemic has not deterred companies from going public. And with that, investors have more investment options. Just recently, for example, Singapore Exchange welcomed tech unicorn Nanofilm Technologies, which was a highly successful listing. Other recent high-profile listings are GHY Culture and Media and Credit Bureau Asia, both of whom also have very strong and unique Asian growth stories, and they attracted significant institutional and retail investor interests. Their prices performed well post-listing, and they are ranked highly in our most active stocks by turnover. On top of this, SGX is also able to offer investors methods to gain exposure to companies listed internationally. and yet in a way that costs you lower fees with lower capital outlay. So how do we do this? We do this by offering trading in ETFs and DLCs, daily leverage certificates. DLCs are specially designed product that SGX introduced. DLCs allow investors to gain leverage and exposure to Asian markets and Asian companies across a wide range of sectors, including China technology. Due to strong investor demand in the past year, we listed nearly 80 new DLCs. DLC turnover in 2020 more than doubled. And in recent months, trading in our Hong Kong single stock DLCs has tripled. Similarly, turnover in the Singapore ETF market also jumped almost 3 times, as more investors chose to use ETFs to gain broad market exposure and diversification in their portfolio. Retail investors' adoption of ETFs has accelerated, as the total number of ETF retail holders jumped by 75% year on year. We have had some quite amazing success with recent ETF listings, including a Hang Seng Tech ETF and a China government bond ETF. This bond ETF offers retail investors low cost and direct access to the world's second largest bond market, which they simply cannot otherwise access. So the trading challenge that will follow today's summit will include ETFs and DLCs. This will be a great opportunity for everyone to try their hand at trading them without risking your own capital. I would like to end my remarks today with a note of encouragement. Much of what we're seeing in stock markets is unprecedented. And even as we head into uncharted territory with a COVID reopening, I'm confident that intentional and purposeful traders and investors like you guys will prove your resilience in managing and accumulating your wealth. I hope the Singapore Trading Festival will be a part of your journey in sharpening skills and growing experience. I hope that you will be able to join us in the trading challenge. Thank you all once again for taking time to be with us today. This will hopefully be the first of many trading festivals. Thank you again and have a good day ahead.
Thank you very much, Mr. Michael Sin. And remember, ladies and gentlemen, the next session or sessions will always pop up as a button at the top of this page. So do click on the button that comes up at the top for the next session. We actually already have the next one starting right now. We also have a simulated trading competition that runs next Monday to Friday, as Michael just mentioned. It runs from March 1st to 5th, next Monday to Friday, with cash prizes ranging from $200 all the way up to the top prize of $5,000 up for grabs. If you want to win that, you might want to pay special attention. Happening right now, the founder of SMB Capital and the author of the trading classic, One Good Trade, is delivering our keynote address, Mr. Mike Bellafiore. Click on that right now, and we'll see you again at 10 a.m. for our next panel discussion.